Good afternoon all. Myself Mahima Agrawal, CFO Punjab and Sindh Bank. I welcome all the analysts present today on behalf of Punjab and Sindh Bank. On dais, we have our MD and CEO sir, Mr. Swaroop Kumar Saha, ED sir, KV Raghavendra sir, ED sir, Ramjas Yadav sir, and we have also our GMs from HO present here. Our MD and CEO sir will give a brief presentation followed by the question answers. Now I request MD and CEO sir to please carry forward.
Yeah. It's a brief one. Yeah. Good afternoon, everybody. First of all, on behalf of Punjab and Sindh Bank, we welcome you all to this analyst meet on the Q2 and the half-yearly performance of the bank. And it's a pleasure for me to be here, standing here in front of you in Bombay, and discuss with you and what is the state of affairs in the bank and how we are taking it forward. It's also a pleasure for me personally to be talking to you amidst one of the stalwarts of the industry. Sir, thank you for coming, Narendraji, and it's happy to connect with many other people around of the industry. So, as you know that the bank, I know you all are having the results with you, so I'll not delve too much into the individual parameters. I'll just go through them in brief, and I will leave the question and answers to you, and we'll try to answer the questions as much as possible. What in the opening remarks I would like to tell you is that the bank is the smallest public sector bank and had its share of challenges in the past. During the period of March 18 to March 22, the bank was in a consolidation phase. There were a lot of issues on asset quality, issues on capital adequacy, issues on the profitability of the company, of the bank. So, thanks to the government also infused substantial capital in 2021 and 21-22, and with the entire team PSB getting into the consolidation phase, the bank was able to make a great turnaround last year with a record profit for the bank of 1,039 crores. Having said that, we are now in a phase, we are moving into a phase of 22-23, and we have 2 quarters of consistent performance in terms of efficiency parameters. And if you have noticed our balance sheet also, the balance sheet also is now significantly, not significantly, balance sheet is now incrementally showing some traction on the top line. We are on the top line has grown around 6,000 crores in 2 quarters, while in the last 4 years, from 18 to 22, if anybody has analyzed our balance sheet, you will find that the business top line growth was around 1,000 crores. So we are now well capitalized to take on quality credit growth, and based on the capital that we are now having, we have done certain performance parametrics. The important point here is that we were able to show consistent net profit growth both on YOY and QOQ basis. Our PCR has increased to 89.10, and we were able to provide additional provisions in our balance sheet of Q2 of 210 crores against another 142 crores we have done in Q1. So that is the strength we are building on. And on the asset quality front, you will have find significant improvement when our gross NPA has come down to 9.67% from 14% plus a year ago. On the net NPA, we are at 2.24%. So we intend to work on the asset quality also in a strong way. The main area of discussion which will happen, I am very sure, during the Q&A session, I'll just give a backdrop that our credit growth so far has been 9.12%. We started the year in March 22 with a 3.80% credit growth. We increased it to 7.06. Now we are at 9.12%. Our deposit has been 3.27% growth. So These are our main strength is now moving into the RAM segment. We are growing 16% plus in our RAM segment. These are some of the numbers in the individual segment. The ROE is at 0.84. In the sequential improvement also, there are certain green shoots that are coming for the bank. Our operating profit has sequentially improved by 26%. The fee income, again, important parameter for us, 13.33%. So these are some of the numbers on the sequential. These are the already you have. Our strength is that we like to rebalance our portfolio. Why we were not growing in the past 4 years was that we were rebalancing our portfolio in between the corporate and the RAM. The corporate was dominant with 55% plus, and the RAM was 45. We are trying to reverse that trend, and we are nearly at 52-48 ratio in the bias towards RAM. So that's what we intend to bring. And in the retail segment, what we are working on is bringing in new products. The bank was now diversified its products. We have brought in on the liability side and also on the asset side. On the retail side, we have brought in a new product on the pre-approved personal loan, which is driving my personal loan segment of 100% growth, and that is a data analytical based offering, and we will be bringing that again to the digital platform in 3 clicks very shortly. The UATs have been done, and the gold loan also is showing some traction, and the core housing loan has touched double digits so far. So we'll be focusing on housing loan, vehicle, and the personal loan segment. So our retail and RAM in overall, we expect to grow at 20-22%, and our corporate segment will like to improve to 7 to 8%. So these are some of the other numbers. The important point in terms of our asset portfolio is that the AAA is AAA rated, if you find it, 6.85 to 13.23. And that is giving us encouraging signs that we can have the cushion to expand our corporate credit book on the top rated accounts. Our government guaranteed accounts are at 37.23. That is the figure that we are working on. So 37.23 and 46.22, triple B and above, we are having around 83% of our accounts in that category. On the treasury front, we are consistently bringing down our duration portfolio. These are all the figures you already have. I'll not like to talk on this. The important point here is that we are moving in such a direction that our net interest income has a good YOY growth. The bank of our size, we are unable to take strong cuts in the interest rates, the competition that is happening in the industry, particularly also in the PSU segments. So we are judiciously working on that so that our NIM overall going forward does not get too much of impact on that. At current September 22 level, we are at 3.06. At NIM, we are conscious of that. We expect that the NIM should be around 2.9 to 2.95 going forward for the bank. The provisions have a provision coverage ratio we have been able to increase, and therefore our net profit, in spite of additional provision of 210 crores for the quarter, our net profit was 278 crores. We showed a YOY growth of 27%, and a sequential growth of 35%. So that is where we stand in improving our bottom line. If we had not provided that 210 crores extra, our net profit percentage would have grown up much higher. So these are some of the numbers that we are working on. Yes, one of the key numbers is on our cost to income ratio. Here again, we'd like to tell you that 65.57 to 65.30, our bank is an outlier in the cost to income ratio. We are aware of that. We are addressing the issue. But the green shoot is this, that in spite of the muted return from our investment portfolio due to the market dynamics, we have been able to bring down the cost to income ratio by 27 bips YOY and substantially on a QOQ basis. So that gives us encouragement that we can do better, and we are working on various third-party products. I like to tell you here at this point, that the bank is diversifying into various third-party products. We are to diversify its fee income opportunities. We are going into a co-branding credit card business with one of the largest credit card issuing institutions. We are opening up for wealth management. We are opening up for health standalone business, and we are opening up our third-party life insurance for a third partner. So these all opportunities will give us good traction. And on the reduction of the cost, I have said in my various interactions with others that we are focusing to a large extent on augmenting our salary account base. So two of the success stories that has happened for the bank, which I'm happy to share with you, is that we have been able to mobilize 10,000 plus salary accounts of Municipal Corporation of Chandigarh and another 14,000 salary accounts of Nagar Nigam Lucknow. So overall, around 25,000 accounts we have been able to mobilize, which gives us the encouragement that going forward, that this is a segment which we can, though a small-sized bank with limited presence in pan-India, geographically skewed presence, we have the still ability to penetrate deep into the salary account base of government employees. So that is an area which we are working on. In fact, if you see our CASA percentage on a YOY basis has moved from 30% to 33%. So that is the area which we are working on. So cost to income ratio will be a factor of both cost and income. Our priority will be to increase our income to reduce the cost to income ratio. Gross NP, as I already covered, is significantly coming down, 9.6% at this point of time. We expect that going forward, we shall bring it below 9%. Some of the accounts are under consideration for NARCL. We have 7 accounts amounting to 1,590 crores, which are under consideration for NARCL. We expect some resolutions to happen. And we have certain NCLT accounts, which resolution will happen. In the small value accounts, we have opened up a non-discriminatory scheme, which will give me a lot of traction in the small value accounts, particularly up to 1 crore. So overall, we have done a recovery around 700 crores plus in half year. We are very hopeful that with some big resolutions happening and with some small value account settlements happening, we can bring the recovery upgradation figure to beyond 2,000 crores in the current year. Our PCR we have discussed, 89.16. Credit cost remains less, and our slippage ratio is also very less. Fresh slippages sequentially increased by 56 crores, 321 to 377 crores, primarily in the agriculture and one corporate, mid-corporate type of an account, which we have already provided 50% in that. It is around 72 crores of advances. So 50% we have already accounted for in that. And in this, what we find is, though the incremental slippages show a traction of 56 crores plus, what I'm happy to share with you is that out of that 56 crores, we have already recovered 52 crores in the month of October itself. And the overall recovery for the month of October has crossed 200 crores already. So we are focusing on this area very, very strongly. These are my sector-wise NPAs. On the SMA book of about 5 crores, we have 288 crores SMA 2, but this figure has also come down to 210 crores approximately in October 31st, and this 542 crores have also come down to around 340 crores in October. So though my overall it is only 0.74 and 0.39, but we are strongly monitoring this. We'll be improving our collection efficiency, and we'll be involving our call centers in future. The expansion of the scope of the call center is under progress. We are also going into that, expanding our BC network. We didn't have the corporate BC model in the bank. Our total BC network is hardly 327. which we intend to increase to 2,000 plus by March 23, and maybe it's 8,000 plus in March 24. So that will improve my collection efficiency also. Capital, as you all aware that we were supported by the government with substantial capital, and our capital adequacy at this point of time, we are well capitalized at 15.68%, much above the regulatory requirement. We are focusing on digital transactions also. A lot of innovations we are bringing in on the digital side, and we were late starter there also. We have a unique PSB unique app. We are upgrading that. A lot of value-added services are being now brought into that. The Google rating, which was at 2.6 in June, has improved to 4.4. Had improved to 4.4. Sometimes it fluctuates. Had improved to a maximum of 4.4 in 2 months due to various upgrading of the overall onboarding. And now through that, we'll be introducing online savings account, online wealth management products, credit card products. We'll be integrating quite significantly there. Some of the digital initiatives. This is another point which we are faced with. A lot of questions come here. What is the plan for the future? We are still a northern-based bank, and the pan-India presence is limited. So what we have decided is that now we'll be expanding on a pan-India basis, and for the first phase of this, we'll be opening 25 odd branches, primarily into the other segments of the country. We have already opened 2 in Rajasthan and 1 in eastern area. We have lined up for another 22 for this, 25 in total for this year, and 25 for the next year. One of the success story was this also. Sorry, is that first time the bank got into this EASE agenda. As you all are aware that the public sector banks are under a reforms agenda called EASE, and PSB, Punjab Sind Bank, of last year were awarded in two categories of the top improvers award, first runner-up, and synergistic collaborations. So 2 awards we got for that. So we are now coming into the reckoning in terms of our upgradation of our infrastructure. These are some of the way forward we'll discuss in your Q&A. And the final slide is on the guidance that we maintain. Credit growth, we still maintain a deposit 12%. Advances growth, we intend to 15%. Gross NPA, earlier we had given a guidance of below 10. We intend to give a guidance of below 9 now. Net NPA, we will keep in line with the other guidance, earlier guidance of less than 2%. PCR more than 89, inch it to 90%. Recovery upgradation more than 2,000 crores. NIM today at 3.06, but as you are all aware that the deposit rates are increasing, so we'll have to understand how it pans out. So conservatively, we have kept a guidance above 2.9 still, but we'll do much better than 2.9. We are very hopeful on that area. Credit cost, of course, will be less, and the slippage ratio will be less than 1.5. So on the whole, thank you for your patient hearing. On the whole, what we would like to tell you at the end of it is that the bank has made a turnaround last year. The bank is into a transformation journey from now onwards. So from a turnaround to a transformation, that is what we are looking at. And for that, the entire team of Punjab Sind Bank is now very agile. We want to make this a most efficient bank in the country, or as an agile bank in the country, and a lot of capacity building will happen. The system processes are being strengthened. We are on the credit underwriting also. We have now segregated the sourcing and sanctioning. Now the entire stuff is being done at the back offices. The sanction part, only limited amount is given at the branch level. Our underwriting system of what we call LOS, loan origination system, has been much more strengthened. We have created good risk appetites for the bank. Our risk management practices have improved. So all in all, this is a time for a quality growth for the bank, with a focus primarily to improve the bottom line and the efficiency parameters. Thank you very much. Thank you. Now, I'm ready to have your questions, please.
Yes, sir. Uh, as uh, as was, I mean, we were discussing even at the time of the online interaction after your last results. I would repeat in the physical form compliments to you for the fantastic progress which the bank has made on all the fronts. My some of the observations or questions are: number one, recently we read that ILFS payments have started coming in, I think, to the banks. So what is our number there, and when do we expect some of these payments coming, and how much before 31st March 2023 do we expect? Because this was not considered earlier in the...
So I think the exact numbers my GM recovery will tell you. We have already started getting the recovery in those. The first lot we got around 68, how many? 62 crores. We already got that amount. Another 90.
105 crore.
Another 105 crores is in the pipeline, which we expect any resolution happening. Funds actually coming in.
Before
resolution is...
Actually coming in by,
before 30th November.
by 30th November.
So this will be directly added back to the bottom line, or provision reversal, or you... Okay. So after having considered, you have made these targets or the objective. It was considered in that. Yes, sir. Yeah. Secondly, sir, in this NARCL 1,590 crores, how much we expect to go before 31st March, and what is the NPA numbers there, and what kind of recovery percentage-wise we are looking at in from those 7 accounts, or all the 7s are going now in this current financial year only, or?
In terms of amount, the total amount under consideration in 7 accounts is 1,590 crores.
Yes.
That we have already told. And this includes the 2 accounts of stray also. Overall, 1,200 crores approximately. We expect 1 or 2 resolutions happening in Q3. Some news are already in the public.
Yes.
Very much observing that. And 1 or 2 resolutions happening in the next quarter also. So 1,590 crores is the total.
So about half of that will be in this financial.
We cannot say half of it, but we feel that this quarter, we will have maybe, in the first 2 accounts, the amount is very less.
Okay.
150 crores odd. So we expect a 150 crore resolution in this current quarter, and leave it to the next quarter. If the stray happens, something happens, every day there is something.
Slide change करो.
We are observing that very
But out of these 2, the one is happening at a very good realization value. So approximately we can consider 25% of the 30% in the initial this thing.
That is how we may look into it.
Sir, now coming to the credit growth.
Yeah.
Yes, of course, this is absolutely a very, very prudent measure which you are taking, that, and sir was also telling that the muscles which had become weak now have been brought it to a reasonable level, and now we are strengthening those muscles, and once that is there, we will go, then we can go with the full throttle.
Yeah.
Having said that, sir, still I feel that we have come to a stage now, looking at your performance, looking at your capital adequacy ratio, looking at your CD ratio, that pedal, that can be speeded up, even during the current year also, because 15% on a low base, I think will be just appropriate, not beyond like doing something extraordinary.
Yeah. I think
That is something on which we can, look at. Yes, sir.
Yeah, I think you asked the same question at our con call also. Let us all appreciate that our bank's size and appetite also. Okay, we are in a bank which has not been able to grow for a significant period of time. Certainly, to put the accelerator pedal and it goes into an accident mode, that should not happen. So what we need to do is to calibrate our approach to that level. And what we are seeing in the system at 19%, 18 to 19% credit growth, we don't know how it will pan out in the next 2-3 quarters. Beyond that, whether this is a sustainable growth that is going to happen, because many of this growth is also getting what you call encouraged by some working capital enhancement, working capital requirements also, certain festive season also have played its part, and of course coming out of COVID situation that will also help to this entire credit growth. So on a bank of our size, with an approximate advance of 74,000 crores, we really cannot move very strongly immediately on the credit growth competition that is happening. Okay, so what we feel that once we have come out of a bad phase, it is first important to have a sustainable phase interim before we actually press the accelerator pedal and move a bit fast. So if you observe that the credit growth is at 18%, my RAM segment is more or less in tune with that. My retail is at 18, 19, agriculture at 12, MSME 17. So overall, in that segment, it is all okay. Now, coming to your basic question, why corporate credit may not be growing, right? So we were, as I told you, that we need to calibrate our approach. The market is very dynamic. The competition is very tough, both on the quantum of loan that people are bargaining for and the rate of interest that they are bargaining for. I have to have a judicial approach in both of them. So I have to protect my NIMs, I have to protect my NIIs. I'll be in the business of corporate credit, but not at the cost of my efficiency. So if you have seen our balance sheet over the last 3 quarters, we have incrementally moved from a negative zone in the corporate to at least a positive zone in September 22, with a 2% growth in, not significant. But for a bank which has not grown for 4 years, it is significant. So what I am trying to tell here is that we will take a calibrated approach on this, and as we pace up our and we build our inherent strengths, we build our inherent capacities to lend with good risk management practices in place, I think we will be poised maybe also to come in line with the other banks.
Are we looking for some decentralization of because earlier now, because of all this problem, most of the things have been centralized, even from the credit point of view, even some of the schemes for liability side also. So are we now, looking so that the local offices become very competitive with the, is there any such plan or something?
Yeah, in terms of credit, you are talking of delivery of services?
Delivery and powers also at the same time.
Yeah, we have now brought the entire sourcing and segregated both sourcing and sanctioning. Sourcing is done at the branch level, sanctioning is done at the back office. Technically, we call those units as CENMARG in our bank. So we have created CENMARGs in every zone, 25 CENMARGs we are having. Branches are having limited powers up to 10 lakhs. Those mortgage-backed loans also, irrespective of the amount, goes to CENMARG. So the small value and low risk categories have been left to the branches. Branches have been primarily told to source credit proposals and give it to the back end for the sanctions. And it all goes through a system, the loan origination system, and we have strengthened that. So the back of we have 2 large corporate branches, which are proposals are dealt directly at the head office level. We are now going to open 4 mid corporate branches pan India, where we don't have large corporate branches. That announcement we will be making very soon. So 2 large corporate, 4 large corporate. Powers are being redefined internally. So the credit delivery will slowly pick up space also.
Last one on this round is on treasury. Now, I think we had discussion on this even in the last meeting also. Now the interest rate and I think the inflation also is little bit coming to a reasonable level and not that alarming as per the RBI governor's statement also. So how are we placed? Are we looking at some gains instead of having the mark to markets, because we were expecting another 50 to 60 basis point further increase after the Fed increase there. But I think it may or may not come. So how are we are exercising those information, putting it into the use and some information on that.
See, on the Q1 we had a depreciation hit of 109 crores. Q2 we had another incremental of 9 crores. So we are immune to that minor fluctuation. Now the numbers that have come up yesterday, the CPI numbers and the global numbers and the tone of the global numbers also is very important. So we feel that maybe the overall the regulator here will also take cognizance of the positive developments that are happening. Maybe the cycle is peaking to a level. We'll have some proportion of hike maybe in the next level also. But I personally feel that that a below 6% CPI is very, very possible. And with that scenario, in that scenario which is being built up for the future, we are now in a position to get back some of the MTMs. So let us hope, let us all pray that these things happen, and the entire banking industry is benefited for that.
Thank you, sir. Thank you.
Good evening, sir.
Yeah, good evening.
So, I am K.K. Gupta from Surgeon India. So, we will compliment you
Thank you.
in respect of your net profit growth and assets quality, which I improved a lot. Net NPA level has come down to 2.24%. My point is, during these financial years, you can say year to year, September to September 21, your growth in deposit is only 3.27%, where your business growth is about 7.06%. When we are talking about the market cap, it is around 13,000. And we are talking about the deposit or credit, rather ratios. How you feel that during this financial year, whether your market cap will go up, and important aspect is, what about the business growth will be there? I think for the NP level, profitable level, I think your bank had done a wonderful job. That is my submission to you. But what is your feeling for the next year?
Yeah.
How much growth you are projecting?
Correct. Thank you for the question. See, first of all, we are a part of the system, and we are not immune to the things that happen in the system. The system is growing credit 18%, and the deposit is growing at 9%. There is a gap there itself. And we in our, if I bring that call out in my bank, we are at 9% credit growth and 3% growth in the deposit. So there is a difference. So what we have done is that now we are also now in the domain of getting good deposit products per se in the bank. So not only in terms of interest rates, but also in terms of new types of products in the bank. First coming to fixed deposit side. Now we have got a very good product of 601 days. We are providing very high, very competitive rate of interest on the deposit side in terms of the fixed deposits. So that will give us a traction on the fixed deposit and mobilize retail term deposits for the bank. What we are focusing primarily, because we are having a low CASA ratio also, that we need to improve our salary account base further. So that's why I narrated two stories of Chandigarh and Lucknow, wherein we have been able to generate a mass 25,000 salary accounts. Now this we intend to take it forward. So our primary focus would be to have low cost liability products in the bank. And if I can improve my digital innovations, if I can improve my third party product bouquet of products and gives me more opportunity to cross sell, I think that ratio will improve. In fact, if you see our YOY ratio of CASA, it has improved from 30% to 33%. And that is a significant jump in terms of ratio of a 3% for a bank of our size. We like to take that forward. So we like to take that 33.5 to 35% March 23 and maybe 36, 37%. We'll see how it pans out in March 24 and touch 40% maybe in a 3-year horizon as we talk around here. So that is one side of the story. Overall business growth, we are hopeful that our 15% credit growth will happen and a deposit growth of 12%, 11 to 12% we like to achieve. So overall we'll have a 12-13% of a business growth we like to have there. But the primary again what we like to, yes, we'll calibrate on a quarter-on-quarter basis. So on a credit side, suppose you ask me at this point of time what would be my calibrated approach, we may do around 11 to 12% in December. and then move on the last busiest quarter to 15% plus in the March quarter. So similarly for the deposit side. So that is what we are at this point of time looking into in terms of the overall growth story of the bank. Going forward, yes, once we stabilize ourselves, once we stabilize in the market and that in the way that we should be placed in the market, I think we will be able to, with the capital, strong capital that we already have, we can really move very qualitatively and one more thing which I think Ajmera Saab ko maine thoda bolna reh gaya is that any business growth will depend on the technological upgradation also, and our bank also has been a bit laggard in terms of my financial systems. So we are now moving to that category 7 to 10, and that should be done by June 23. Internally, the process has started. It's a very long process internally. So by June 23, I'll have that robust platform also with me, which will give me more teeth to acquire customers, to go more strong in my, once my fundamental systems are very strong, I can be a much more proactively move to a better situation. So we'll wait for that. So 23-24 would be a better year for us.
Sir, we compliment you for diversifying.
Thanks.
For having the non-fund based income. I think you are taking steps. Either you are talking about the insurance, or talking about the co-branding of the credit card, or something differently.
Yeah.
So I also find in the market that your housing loan interest or vehicle loan interest is at a lower level. So how you maintain all such things, sir? Because size of your bank, you are competing with the State Bank of India or other banks. I think it is very competitive. So what is the reason for that? Whether you can spell out something?
I gain somewhere, I lose somewhere. It's a give and take matter.
Yes, sir.
So I'm not competing on the corporate side.
Right, sir.
Okay, somebody asks me, you take 1,000 crores at 6.25, it's difficult for me.
Right.
All right. So I compensate there.
Okay.
So if I get a much more better return
Right.
at 8% plus, and if I can build my portfolio and get the turnover and the volume in that portfolio,
Right.
I think I'll be in a better position to compete. That's why we sacrificing there and trying to build our portfolio there. That is
Very important decision, because I find from Chandigarh, because maximum housing loan, Punjab and Sindh Bank had done it.
Yeah.
So that means your rate of interest, other things are very competitive.
Very competitive
When
vehicle
you are
also.
talking about the other banks, even State Bank, HDFC, other things, I think your rate is very competitive. So
Yes.
just I want to find out, what are the reason for that? Whether your cost of deposit is very less for that, or your CASA is very with you? So what is the reason for that?
Those dynamics will be there for any organization. My cost, those figures are there. My cost of deposit is 4% plus. My cost of fund is 3.62. So
Right.
those dynamics are there.
Right, sir.
But ultimately, somewhere you have to penetrate. You know.
Right.
So that is what we say. The calibrated approach is very important. How we do a calibrated approach in my lending practices.
Okay.
So I will try to get penetration in my high CIBIL score rated and give them concessions more, so they are onboarded in my bank, and I do more and more cross selling. So that's my PAPL story is panning out very well.
Right.
My PAPL product we didn't have, the pre-approved personal loan category, and we have a small customer, we don't have a big customer base, but we didn't offer them that earlier. Already we are at 150 crores in that category. So, and that is a data analytical based, historic transaction based product. So the chances of delinquency will be very less. So this new innovative very in nowadays. So that is where we like to more get into. Corporate will do. It is not. It's a area we cannot ignore. So, but we will do.
That is also most important for corporate credit.
Yes.
That is also important. Sir, we compliment you. I think under your dynamic leadership,
Thank you.
so bank will progress like
Thank you.
anything. Thank you very much, sir.
Thank you. I think the lady has put up her hand.
So, am I audible?
Yeah, you are. Please.
Yeah. So, credit cost for the first half is 0.1%, and you are anticipating for the full year closer to around 1% odd.
Yeah.
So, it implies that in the second half you are anticipating higher amount of slippages coming in?
Not really so. We have given a conservative, frankly speaking. One of the mid-corporate type accounts, that 70-75 crore category is actually a NPA in the books, but technically due to a court intervention, we are unable to classify that account as NPA. So maybe that may add up to the volume, and maybe certain stress in the MSMEs, but we are confident that our slippages should remain below Q2 level. But we see how it pans out, because certain dynamics we need to always, we cannot be very sure of all the factors that come into play into which determines my credit cost. So we have given that conservative guidance, but we will do much better than that.
And sir, key to success or growing advances would be nothing but your deposit growth. If I just look at it, the first half is at 3%, and you are anticipating closer to around 12% odd growth. So if I just look at the industry, even the industry is at 10%, PSU banks are also 10%. You are lacking there as compared to PSU banks as well. So what is the missing product gaps or services which is not there currently? You want to fill up the gap?
Yeah, that's what I was explaining. This entire deliberation is that we were hard up of products in our bank, and both on the asset side, on the liability side. We were not able to catch that. The bank was very much focused on its recovery and balance sheet requirements and the capital constraints that we had. The entire bank was focused on that. So innovation in product development also didn't happen. So now that we are developing these products, we have created a new type of a current account, which flexi current account, which we say. That product was not there. We have created a current account with POS terminal product, a combo. That was not there. We have very good salary account, which is enabling me to mobilize the salary accounts, or salary plus we call it, with a very attractive insurance cover, and that we are marketing very strongly. So, and if you see, my CASA growth is still is having 12-13% growth is there. My savings growth is 14%. So overall, it may be stiff, but we have kept that guidance. We feel that to achieve the overall objectives of the bank, we will try to mobilize as much as deposits as possible.
So, and on one thing more, on the advances side, you are expecting 15% growth. What will drive this growth? Because on the corporate side, I guess you still, PSU banks are still not growing aggressively. So one thing I want to understand whether, PSU banks are participating in the current corporate, rally demand that is coming in, or it is too, coming at a very low margins, and still you want to choose not to grow in that segment?
Yeah. I also covered this in my earlier deliberation. My 15% credit growth will come primarily from the RAM segment, which we expect between 20 to 22%. We are at 16% now, because we are in co-lending mode. We are also upgrading our infrastructure for pool purchase in the future, in Q4 maybe. So all this will drive, and my PAPL product is there. So we'll be augmenting our RAM segment growth very strongly. We'll do our corporate growth. As you rightly said, the competition is very tough there. And for me as a bank, Punjab Sind Bank size and the cost CASA ratio that I have and the cost of deposit that I have, I need to be judicious in in balancing my portfolio. So I have kept a conservative guidance of corporate credit about 7 to 8%, and a RAM segment around 21-22% maybe. So we'll to overall balance of 15%. So it will be driven in the RAM segment. It will be driven by housing, gold loan, personal loan, vehicle loan. These are the.
So any rough estimate as to what could be the return ratios in terms of ROA and ROE for the current fiscal, realistically, which you might achieve? Any rough estimate?
We are at 0.84 now. So we are looking into a profitability around 1,100 crores for the current year. So we will improve it. We will bring it close to 0.90 as much as possible. So that is what we will endeavor to do it.
Sorry, can
0.9.
0.9. And one last thing, I want to understand what has operationally changed, in terms of functioning of a bank, over the last 3 to 4 years, in terms of improving your performance at the ground level for for PSUs in general, and more particular about your bank. Anything that has changed?
See, on the ground level, as I told you earlier, that the bank was going through a rough patch, as any PSB was doing earlier. we were also not immune to the ecosystem. So we also had our rough patches, and the bank was primarily into just consolidation. We were just trying to get as much as to preserve our capital. We were taking all those measures to preserve our capital. So the pumping of the capital infusion is minimum from the government perspective. So that was the basic endeavor, and we were focused on recoveries primarily on the old toxic assets that we had. Now that situation has grossly changed for the better, and we are now in a business environment, which I can tell you. We are now focusing primarily to improve our business, to grow qualitatively, to grow efficiently. So the entire system has now been calibrated towards that objective. The team is now much more motivated. When your organization is going down in terms of your profitability, the morale also gets hit to a large extent. We are all human beings, and we are all immune to such behavior. We are not immune to such behavior. However, with the change that has happened, we are now finding that my feet on street is much more agile, much more trying to talk business, trying to connect with customers. And one strength that I have in my organization, I can share with you, is that we have a very good loyal customer base. Some of our customers, in spite of so much of competition and availability of organizations where they can shift, we are still having a good base of loyal customers who are banking with us from 50 years, 60 years, 4 generations. And wherever I've done town hall meetings, customer meets, I've found that as a great encouraging sign. We just have to keep that, encash on that. Number 2, our average age of my employees is 75% of my employees are below 40 years of age. So though the bank is very old and 114 years old, but my age of my employees are young. So I can really take them on board, and that is what is happening now on the ground. They are getting back the confidence that this bank can also be a part of the overall growth story of the country.
My name is Manoj Alim Chandani. At the outset, compliments to you.
Thank you.
For excellent benchmarks. In fact, you have achieved the highest benchmarks in key ratios like ROE, I think 20.88%. I think this is at best among all PSU and private sector,
Thank
right?
you. Thank
I don't think anybody has higher.
Okay, I'll check up that, yeah.
Right? Huh?
Madam, I'll let the CFO look into it.
Highest. Second thing is on price to book ratio, which is evaluation for banking. I think you are the highest in PSUs.
May not be the highest, but very close to that.
In
I can
PSUs,
tell that.
I wonder,
Yeah,
even
yeah.
bigger than
I monitor that myself also, so I know
even bigger than big brothers,
Yes.
SBI and PNB. So this is really wonderful. A few things. In fact, you answered most of the relevant issues. Other questions were asked. You answered most of the issues. A few important things is looking at your presentation. It's really excellent. One thing left out on one key ratio.
Yeah.
That's the third one we see besides ROE and price to book.
Tell me.
Is the operating profit ratio.
Okay.
When we saw, first is the delight, and we saw operating profit. Why? We see, NI growth, operating profit, half yearly also is low, Q on quarter is so bad. So when we wonder, without operating profit, something is there. So here we would like to know from you what you are doing to improve the operating ratio in line with your other ratios where you are benchmarking against excellence.
Yeah. I think
Operating ratio growth normally should be over 15% in such type of environment.
correct. Absolutely. I think you have hit the nail on correctly, and I have nothing to. Only I like to tell you is my operating profit, though low still, has grown sequentially by 26% on a Q1Q basis, number one. Number two, my half-yearly operating profit is on a negative territory due to because of the impact of the investment book income that we get normally on the trading side. That is what has made me negative. But the green shoot, what I like to tell you, sir, is that in spite of that having that challenge, in spite of having that challenge of not getting that back, that return on my trading book, my operating profit has sequentially improved by 26%. The base is less, I agree with you, but that means I am now being able to recoup the loss in that income category by some other income. That's my core income is growing at 18% YOY, and that is where I am focusing. I should not be over dependent on my investment book. So that is one part of the answer. The second part is what is going forward. That is more important for me to answer.
A normalized RO operating profit growth.
Yeah. So that is I think the outlook what I am looking into. See, ultimately operating profit would be a component of my income and my recoveries and all that. So all that will be all collate into somehow it will result into an operating profit for me. So as I was mentioning, my income primarily from the growth story was not happening. We were able to, last year we had a 1,300 crore of operating and 1,000 crores of net profit. This year we are having in quarter 318 crores of operating is a 278 crore of net profit. I need to improve this. So last year we had a 1,300 crore overall operating. So I am expecting 1,400 to 1,500 crore of operating profit on the current year. And by where will I get this? I will try to, as I was saying, I will try to grow more on my high yielding assets. I will try to increase my other income, focus on recovery in TW accounts, focus on bank assurance business, which the bank had but has not been able to extract the total potential out of it. So that is one part of what I would like to highlight, is that my gross income from my basic business of credit. That's why we are trying to augment our credit growth story. What Ajmeraja's point is also correlated here, is if I cannot augment my credit growth, my other ratios also may get impacted in the future. Today we are all okay, but we need to prepare ourselves for the future. And again, we cannot really go whole hog immediately. So again, a calibrated approach. So it's this cycle is, we like to tell before all our stakeholders is that we have learned what has happened in the past. We are going to position ourselves very strongly this current year. And once my infrastructure is in place, my technology platform is in place, my capacity building is created, my skill sets are improved, my systems are improved, I can really take maybe a big leap forward in the next year going forward. So my income will be primarily will try to get from the business side and from my other fee income on my commissions and non-fund business also. Non-fund business is another territory where we need to work. My forex business is very limited. It's very paltry. So now, if you have seen the newspapers, we have gone into a recruitment drive for forex officers. So at a market, not on the market means at a higher scales. So the specialized positions we require to be also put in place. We are getting into data analytics. We are going to go and recruit people on the data analytics part, treasury part, forex part, on the CXOs also. We have appointed a CRO on a contract basis. The other CXOs, which are important, also will be taken on a contract basis. We are searching the market for that. So this period, sir, is for establishing those processes, and we are not in a short-term quick win solutions. We are not in that run. We are trying to stabilize, and maybe we take a much more better qualitative approach to our growth story from the next year onwards. And we'll see how the ecosystem also pans out. It is very dynamic. Today we are at 18-19% credit growth. Maybe it's a short term. It may not be sustainable in the long future. People say that this may peter down over a year-on-year basis. So again, we have to recalibrate again there. So we'll see how it goes. So it will help us in both ways, study the market, prepare ourselves internally, and grow qualitatively.
A few important points. In fact, in the last a couple of years in this pandemic, we had very good online meets and online interaction. We were talking about technology. We
Yeah.
had also talked about apps,
Yeah.
technology apps. At that time, you have been talking about development. As of now, would like to know what is the stage of app and the number of downloads and the number of business done.
Yeah, yes. We have been talking on that. And any more question you had on this?
Yeah.
Yeah,
Few.
yeah.
This is one of it.
Yeah.
Other, I will just raise the point so we can discuss.
Yeah.
Gold loans is a very good opportunity
Yes.
in this area.
Yeah.
It is worth thousands of crores.
Yeah.
Or in fact, tens of thousands of crores. And the number we saw from the PPT, I think,
Yeah.
just about 600, and it's a very high NIM product. So whether stage what we can go and grab market share at the earlier stages. There's
Right.
huge competition in that. Everybody wants to get into it. Second thing is we talked about what we were lacking. In fact, PNS Bank was always known for the most loyal customer base. No, and you talk about flexi current. Do we have a flexi savings
Yeah, we have.
account
We have.
which goes into FD directly?
Yes, we have.
In fact, most of the private sector bank,
We have.
ICICI
We
are
have.
good. And
We didn't have the current, so we went into the current. Savings we already had.
right. Another thing stands out in PNS Bank in your PPT, ROE price to book fine, but we have the lowest book value, among the lowest. If I'm not mistaken, it is 7 rupees.
Yeah, 7 rupees. You are right. 7 rupees. You are right.
Possibly in the next 2 years, the profits. It just accrual of profits, it will cross the
Yeah.
10.
Yeah.
So, what is it going to stand that way, or something? I believe a corrective course of action has to be done.
Correct. Okay, let us answer one by one. Okay.
Yes.
You have put in a lot of things in the basket.
Yes, and also the payout. Ultimately, everybody looks for dividend, and the government looks for more dividend. It has been helping you, and the other investors also. And all PSU banks are going to give good, apparently interim dividends and finals also.
Yeah. So let us calibrate our answers a bit. On the digital side, first of all, we have a digital app called, what we technically call PSB Unique internally. We have, this was launched in it was launched in Q3. Q3 of last year. Okay. So it was Q3 of last year, and any new technological advances have teething issues. So the bank took its time to stabilize that app itself. My rating in the Play Store suffered significantly due to that. The users were not using it because of the issue. Who will use an app which doesn't work properly? So the first primary task for me was get that thing stabilized. So we worked relentlessly on at least whatever services we are providing at this point of time, let it be much more smoothened and do it efficiently. And we worked relentlessly on 3 months on that, and that's how my Google Play Store rating went from 2.6 to 4.4. So we got good feedbacks on that. We don't give too many services in that. It's still a lot of things to be done, and that is related to my technological platform also. So now what we have got a place where we can now move very strongly. In terms of your downloads, you also asked, I think, isn't it?
Downloads and
Yeah.
size of business done, percentage of business done.
Yeah, percentage of business is not too significant for me to tell you. But first of all, I want to market this mobile app to my customers. So what we have given a call internally is that we have in our customer base non-BSBT customers of 58 lakhs. In overall customer base of nearly 1 crore, 1 crore 40. Our non-BSBT customer base is around 58 lakhs. So we want 25% of them, at least from the current year, to be and have that app itself. So that marketing has now started, and we are progressively working on that, and we improvement in the rating, it is easier for us to tell people also to download. So by March March 23, we feel that we can reach 8 to 10 lakhs of downloads for the current year. And with the value-added services that we will be providing with online account opening, video KYC, wealth management, credit card, health insurance, as we imbibe more and more services, the digital traction will start happening. That is one. The second question was on your, I forgot, gold loan, yes. The second question was primarily on a gold loan. You have seen our traction, 92% growth in the gold loan. Primarily, we are not, and any southern-based bank has a territorial advantage as far as gold loan is concerned. And we are not in a southern part of the country in a big way. In spite of that, with a low base only, we are growing at around 90% gold loan. And we feel that, as you rightly said, there's a lot of potential. My returns are very better here. So we'll take this forward and try to bring in new products. Like we have brought in the personal loan pre-approved. We like to bring in certain pre-approved personal loan, pre-approved gold loan category also going forward. The third area.
Are you geared up with the systems because gold loan
Yeah.
is safekeeping custody?
Yes, that will, of course. That is the that is primarily that's what I'm saying. We can all talk of big numbers. We can all talk of my competition with the industry, but ultimately, as you rightly said, my inherent strengths also need to be put in place. So whatever we do, whatever we go big, we first have to have our systems in place. Now it is the time for that. We are building those systems and growing. So as we build up more and more systems, we will be improving our portfolio on that part. And of course, the other point was regarding your book value, isn't it? There was another third question before the book value. Sorry, I just want you to tell me on that.
And then, of course, there was a payout.
Dividend payout, yes. So last year we gave the dividends significant figures to the government also. Our public shareholding is only about 1%. Okay, so we are working on that, how we can bring a bit more visibility in that 1%.
But that has happened since, I believe, I know when your IPO came at a very high price.
Yeah.
And then this is because of government infusion, bailouts.
Yes. That's the story. You already know that.
And your book value was very high, it was more than 30, 40.
Yes. Now the good part was that in the last week, in fact, I touched my 52-week high. Though the figure is not big, but at least for the banks, which is growing.
ROE made the difference.
Yes, ROE made the difference. It touched 19.95. So now it is hovering on 18.60. So it is good that these things are happening. And once the overall bank's growth story unfolds, and we go into a profitable growth trajectory, these are all subsets of this performance, and I think we can tap the market with some capital, though small, some market in dilution, try to dilute some portion of the government holding. So if these all things happen and with traction happening in the bank, we can take the bank forward and all the numbers will all fall into place automatically. As I told in the initial also, top line is good, important for us, but I think our important focus in this entire growth story will be on our efficiency parameters, which we have also highlighted a few of them. So that is what we will be working on.
The last question, then others will take offline, important one for everybody. A few years back, when the consolidation happened, the big mergers, BOB, PNB, etc., a small bank was left out apparently for a certain reason. And there were 4 or 5 other banks. And among all those banks, this one has the highest government holding. Clear. You yourself gave it a number. So as of now, what is a thought process you have achieved through, lot of efforts, and maybe environment has now helped in the last few months to have excellent parameters, benchmarks, but would it, the thought process in the bank and outside, would be a standalone bank? As of now, you have excellent numbers, but consolidation or divestment, it becomes the easiest candidate. At that time also there was a thought process, but you said what number? 99?
98%.
98%. It becomes much easier than any other thing. And you have much better numbers than the other banks under divestment. They don't have such attractive numbers. But there are many willing bidders across the globe because of huge customer base and huge opportunity it provides. So which way would we go? A, B, divestment, B, second phase of consolidation, or standalone for whatever reason, or any D, any other option?
See, the question is the answers are not with me, first of all.
Brainstorming.
This question is supposed not to be answered by me. It is not in our hands. Why X bank is merged and what Y bank has not been merged is not proper for me to get into this part. What I can tell you from my side is that we have been left alone in that process, and we should feel that we have good reasons to be left alone. That's all. And we try to encash that situation and prove our worth. That yes, we have been left alone as of now. So prove your worth, and we are trying to do that exactly. And if you find that many of the banks which have been left alone are somehow coming back into the story, it is coming back. So it is not proper for me to. We can have an offline discussion somewhere, but it is not proper for me. Yeah, please. Mike.
Sushil Choksi, Indus Equity. Congratulations to the dais for stabilizing the bank and performing well. The cumulative experience between Dr. Raghavendra ji and yourself, between PNB, BOI and Bank of Baroda, stands tall. You've covered most of the topic on operational parameters, technology, enablers to be put in place. The biggest enabler which every bank, whether it's State Bank of India or Punjab Sindh or HDFC, needs human resource. What are we doing that whatever you speak today on this dais can be transformed in the vision of the bank over a period of 3 years, maybe in your tenure, the next tenure, or the tenure after that? And that is a necessity more than any other question need to be answered, because that is what I see lacking among the 5 banks which are left out. I'm being direct and candid because I compare all the banks.
See, every bank has its, thanks for the question, in fact, every bank has its own strengths and weaknesses. We should also appreciate that. A bank of our size also has its key strengths also. We have somewhere, any big bank, if you see the big banks also, they went into rough patches very, very badly in their growth story over the last 4 or 5 years back. And now they have recouped, and with the practices that have been brought themselves, they have also done a lot of improvements. We also, as a bank, need to address this core issue very strongly. Two important issues today in any growth story will be infrastructure and the human resources. Infrastructure we are addressing, as I already told you about the migration, etc. On the human resources, we are now going to engage more qualitative people within the bank, both taking lateral, contract, or in-house. The in-house training processes are getting magnified through our training colleges and through training through other big institutions. We have taken that big on the agenda. In fact, we are going through a process of, first of all, training, because we are primarily growing in the RAM segment. Also, we need to be careful on the future ballooning, some bubbling on in the RAM segment also. So we need to understand that part. So we are training our people how to do MSME and retail loans also on the current context, and how to use the various sources information that we have on due diligence to our processes. We're also trying to bring capacity building in our corporate credit approaches, because with the passage of time and with the various balance sheet re-management exercise that we were doing, we were somewhere lost the bus in terms of our capacity building. So our capacity building needs to be improved. Reskilling is required. Upskilling is required. The digital culture has to be put into place in the entire organization. And there is no quick win on the human resources front. I think sir is here. He must be a master in this. I'm no one to comment on this. But any human resources reskilling and bringing it upgraded to a level which is compatible to the ecosystem, it's a time we have to give. We cannot really just push things along. But the good part, as I told you, the bank is by heart young in terms of my employees. And the buy-in of the employees in this entire growth story will be easier for us. And once that buy-in is done, I think the results will automatically come.
So a question added to this, as the top 5, 10, 20 banks have leapfrogged with a lot of technology mistakes and good products both. And today a stage has come where most of the products have matured where banking solutions are concerned. Now you moved where your technology is from 7 to 10. The tested products which are in the market, whether it's for auto loan, RAM or credit or everything is concerned, is already in place.
Yeah.
So when you leapfrog from nothing to everything possible overnight,
Yeah.
your human resource connect to these technology products needs a faster pace of
Absolutely.
training. So will you train the top 1,000, top 5,000 or the entire bank? And what kind of budget you have for technology and human resource, which may be the primary growth drivers of this bank?
I think I can separately give you the figures exactly what you
No,
are.
no,
I'll give you separately. I don't have the figure with me now, but the exact point that you raised on the reskilling of our employees on the financial upgradation, that is very important. We learned from our earlier banks various experiences, and we are now trying to get into that mode, and we'll try to exact percentage I can share with you separately. I don't have the numbers yet. But we have created a policy and going to the authorities for the proper training program, how many numbers we'll train, and the trainer will train the others. So we'll go into that, but the objective would be to train as much as possible on that. That's why we are taking so much time also from today. We started this project in May 22, and we intend to finish it by June. And significant part of 3 to 4 months in between is exactly earmarked for this process.
So the teething portion would be complete within June and not
Yes,
after
it
June?
will be within June, absolutely.
No, because the gentleman on the dais would know in
Yes,
the
yes,
previous
we all
banks
have
what has
learned from
happened.
that. And
So that
that should not
replication
happen again.
in other bank.
Yes,
Okay.
yes. And being a smaller sized bank, the turnaround, the churning of training will also be faster. So we have kept a 3-month churning for that. And that is included in this process. And it will shortly get rolled out from next quarter onwards.
So one point which I took as a highlight of today's event, that you have a dedicated customer base which have stuck to you for four
Yes,
generations.
yes.
Now, how many products, because you want to build wealth management, you have started retail products, you're talking about gold loans, approved loan segment, you're talking about salary segment accounts being taken from government entities and non-government also possibly, and you're sitting in Delhi, so public sector, private sector, both can be at the tap. How many products would you target to reach out? Like HDFC has ambition to be 7 like Wells Fargo. Will you target 2? Will you target 5?
See, we are at 1.2 around. Frankly speaking, we are at that level, and many public sector banks are at that level. Our target immediately to go to at least 3 in a 2-year horizon. So 2-year horizon, we are moving on a product per customer to 3, and then we'll take it forward as we learn from our past experiences. So that's why this entire bouquet of products was very important for us. And we didn't have that. We only had deposit taking and giving advances. We didn't have the entire set to cross-sell. And once I put these practices in the field, my product per customer will get greatly influenced by that. And I'll like to target myself on a March 24 platter. I like to target 3 from the, I think it's 1.3 maybe at this point.
Congratulations and all the best to the entire
Thank you.
team and management of PSB.
Thank you, thank you, thank you. Yeah, please.
Hello, sir. I'm Vikas Sharma from Informerics Ratings.
Hi.
Sir, talking about credit growth, so which are the key sectors you are focusing in terms of credit growth so that the credit uptake will enhance and we can support the corporate really for the demand?
Overall, of course, I've given the mixture in the RAM and corporate. And within the corporate, I think we'll go into the good quality HAM projects and the renewables and in investment credit also. We're looking into that also. And one more segment, what was that? Infrastructure.
Infrastructure.
Yeah. Health also, yeah.
Thank you, sir.
Thank you.
Sir, I think a few months back I had discussed this with you also when you came in this, that ours is a public sector bank where the government of India is holding almost 98.5%. But still our bank's LCs,
Yes, you said that.
I had spoken to I think all of you and in fact your GMs also about it.
Yeah.
They are not being accepted to be discounted by the foreign banks. In fact, we had got a credit limit sanctioned also, non-fund based for 75 crore. But the party did not avail it because there was no point for him if the LCs are not accepted for onward discounting or for trade finance and other things. So what, has it something, I mean, this has been taken up with some of those, or does it very expensive exercise to get it approved, or
No, it's not that.
are we doing anything in that direction, sir?
So it's very relevant question. Being a small, at times it takes time to recognize. But we are going to forward having certain kind of arrangements with other parts of the world. And soon we will be able to provide you. This will not a problem.
Can you share otherwise which are the particular
I
banks?
shared 4 banks' names in
please you
Dubai,
can share.
and
We'll
that
take
time,
up with them.
I think I don't know whether the concerned.
Pandit, आप थोड़ा नाम ले.
No, I think that time it was I forgot his name. Other GM.
Yeah, it will take.
So in that case, our scope for the non-fund based facility
Absolutely.
increases, which is very secured, good corporate accounts.
Correct.
We can get actually.
Correct.
Even after getting this kind of feedback, we have started to maintain even within country arrangements like Bank of Baroda, PNB, which has got a large presence in the international market. And it is being sold, but rightly if you have some specific name of the country, please.
I think Mashriq Bank was there. Then there was one Japanese big bank was there. Then this Santander, this what is that? That also was there.
Okay.
So some of they are very good international big like Spain's biggest bank that was there.
All this will fall into place once the perception of the bank also. While we'll take this standalone basis to address the issue.
But if
ultimately
it can be
it's a
taken up
perception.
one-to-one with them, that what are we, and how we are, our LCs are fully, I mean, can be honored and fully guaranteed.
Yeah. Yes. Counterparty limits.
We will give limits, they will give limits.
Yeah.
So some banks may not, foreign banks may not do, but if they are in India, they are like Mashriq Bank.
Yeah. And so, as I was going to tell that.
So like that, we make it.
We can.
Get the limits.
Yeah.
Definitely, because as a 100% public sector, if only we are not approached or they
Maybe.
will be doing much.
Yes.
Their information may be more.
Correct.
Thank you, sir. Thank you.
Okay. So thank you very much for your patient hearing and spending your valuable time here. We like to have these interactions going forward much more proactively done, and we hope that we'll be able to deliver on what we have discussed today. Thank you very much. Thank you. Thank you. Thank you. We can do that. We can do that. Yes. Thank you. Thank you. Thank you.